Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video the day before the Fed announcement here on the 3rd of May in 2022. That's the big news, is the Fed funds rate, which is expected to be hiked a 50 basis point move, so 0.5. The expectation is there to push the Fed funds rate 0.25 to 0.75, so that's what we will be watching. If there's any surprises, a surprise would be, and just looking this out into the future, the general expectation is for roughly a 50 basis point hike. If instead, and that will be neutral or expected, if the hike is 3, which is a 25, 25, 25 for a 75 basis point move, that could send stock to the downside. But if the move actually comes out 0.25, that could be a bullish catalyst because the market, for the most part, is expecting 50 basis points. Before we get to the stock market, let's take a look at the TNX. TNX is your 10-year Treasury Yield, and that is right there at 3%. 3%. And that is the 10-year Treasury Yield. When it says 30 here on the TNX in thinkorswim, that refers to 3%. 20 refers to 2%. And this is the big news all of us are watching. The 10-year Treasury note has risen from 1.2% in the middle of 2021 to currently up into the 3% bound. Shorter-term interest rates are a little bit higher, and that's where the inversion comes in, but that's for a discussion on another day. The Fed and their decision, and it isn't always what the Fed announces, it's what they give in terms of guidance, or what they will say about the balance sheet, or anything else about the economy. So anything they say that it's a little bit surprising could be a catalyst for additional surges in this rate, or as might be expected, a little turnaround and pull to the downside or retracement down from the 3% level. Now, if we put that into bond terms here in TLT, the TLT, 10-year early, the Treasury ETF, 20-year or so, that is making new lows, but it itself got a bounce or a rally at least in today's session. Promise I'll come back to it, but the equity market was roughly flat and in a range for today's session, which is again ahead of the Fed. But not just ahead of the Fed. We don't want to get too focused on the Federal Reserve. We actually have about 236 companies that are reporting earnings in tomorrow's session, and that would include such names as CVS, eBay, and mRNA, Moderna, Etsy, Uber, and a few others. So that is where we are in the earnings cycle. And not to be outdone, not only is the Fed on Wednesday, but the jobs report is going to be Friday. So it will be, or could be, a volatile trading week. You're always welcome to come into the Market Watch tab here in thinkorswim and take a look at either the Econoday events or what's taking place. That's going to be in Wednesday. There will be the full list, and that does include overseas or other markets. There's the FOMC, the announcement. The Fed funds rate expected to raise at least a quarter point, probably upwards of 50. So that's what the main focus will be in Wednesday's session. 25 basis points, 50. Could it be 75? Very low probability of that, but of course anything's possible. And outside of that, we have retail sales Friday and the employment situation, or as we like to call it, the jobs report. But other earnings, not to name anything in particular, but will take place Wednesday, Thursday, and then Friday. Some before the bell, some after, and so on. That's what we're looking at, and that's what we are playing into in a volatile week. Let's look at the dollar index. Now that has traded bullishly. That's the opposite, or at least bonds going down, US dollar index rising and rallying. It pushed up into this 104 level, and that could be at least a pullback or at least a punchback from the 104 index level. Something to be watching as we go into and through the Fed and the jobs report this week. But beyond that, let's look at crude oil, which does continue in this relatively rising trading range. And that takes it off to the 100 bound, which is a key target and at least a midpoint of that range. And that upper bound is about 110 per barrel. And we'll pull that forward roughly at just under 90 or 85. What about gold? everything could be affected by the Fed rate decision. So whether you're trading in these markets or just following along, or you have positions, either hedges or maybe a ETF position, perhaps in GLD, that could be in play as well. So for gold, we have it into 1850, and that is a sharp fall from initially 20 and 50 and then 2,000 per ounce just recently in April. And that has been a bad month, or at least a bearish month, for gold in general. VIX volatility has fallen from its recent peak, and that was just shy of the 37 print, and it trades currently just under 30. That's current VIX. And other than that, we'll get back to the equity futures. Where are we in equity futures? In the S&P, just to highlight these key inflection levels, is and remain around 4,100 and 4,150. That's going to be the key inflection support if that does fail. If we do see additional downside activity, then we do have drop zones that take us to 3,600. That would take place if we see the market, I would, for my purposes, be cleanly under 40.50 and under that 40,000 bound. For the SPX, that same reference level, that's the drop zone right there I have in the chart. And that is very close to triggering. So that's going to be the focal point, and additional hedges, additional bearish positions, either in the, again, hedge perspective or taking outright put plays in the event the market does crest, break, and fall beneath this 4,000 in the SPX. Leading names will take us there if that's the case. Now, the Nasdaq itself does continue to hold this 13,000 level. And again, the same logic is in play, the same if-then. And think of it like the edge of a cliff. If the market can hold, then the next phase is a little bit of a relief rally. Maybe not so dramatic as we saw in March, but nonetheless, rally up away from that key support level. Failing that, we have downside targets to take us toward 11,000 in the Nasdaq. And we've seen how some of the big technology names have already done so, including Facebook. Let's take a look at it, both on the daily chart over here, and of course the weekly chart. So that's the perspective in tonight's video, big picture, big levels, and of course the Fed, and where things stand ahead of the Fed and not to be outdone by the Fed, the jobs report, and other earnings in play. So outside of Facebook, we saw Netflix. These aren't not necessarily big market movers, but nonetheless are big decliners. That Netflix shares traded about 700 not too long ago. That was at the end of 2021. But the big names would include Apple, and it is playing in its own, call it sideways, trading range, 155, 167, and about 180. Same logic for the Nasdaq. If Apple shares, they tend to fall under 155, that's going to open the drop zone initially to 150 and then down to 140. Amazon has already had its sell swing and may continue even lower. And its key reference point initially was 26 and now is 2,400 for Amazon shares. Alphabet or Google, similar to Amazon, had its support shattered with an earnings breakdown. So we are seeing the shares of Google or Alphabet trade underneath these levels, but again, the key pivot, creating it all together, put the picture together, it's going to be this 2,300. If Apple loses support, Google, Amazon, other leading companies, one of two things will happen. It's going to be the bounce, which is that rally, and if not, we have a continued fall. Again, that's probably most likely the scenario to play out in these names, and of course the broader technology sector and the Nasdaq. We can also see that in the XLK, its reference point is about 140, and maybe even the consumer discretionary sector, that's at 160. So all these things are worth watching. Financials, roughly speaking, 34, 35. We'll have the Fed announcement and their guidance. Anything they say about the state of the economy and what inflation is, what they expect about inflation to do, and how they will combat it, either aggressively with additional rate hikes to be expected, or if they cool down their rhetoric, could be a catalyst for a market rally. Be prepared, be careful, watch the news, be positioned, be hedged, or if you are not positioned aggressively, it may be a good idea to wait until after the Fed and see where the numbers and the price movement shakes out, not only in the equity futures, but across treasuries, crude oil, gold, dollar, and any other individual sector or position you have on. As always, be careful and safe. This is Corey Rosen with tonight's Theo video update for May the 3rd, 2022.